Jay Powell recently came out to Jackson Hole, and obviously he says he's going to be keeping it hawkish. The Jay Powell speech from Jackson Hole, which is not planned, and what he said was not a surprise at all. The inflation is way too high. We already expected this. For some reason, a lot of people in the markets don't believe him. We're going to get into that, but it's nothing new. He's been saying the same thing from the beginning when he started this crusade. They have no plans to turn this around. They're going to keep hiking rates until something breaks. That's their whole plan. A lot of people didn't believe it, but literally it's their plan to break something, whether it's the stock market or a bunch of people get unemployed, something. So we're either going to see a stock market crash pretty soon or in the midterm, or we're going to see a bunch of people unemployed like we've never seen before. But anyways, when we take a look at these charts, the S&P is going downwards, broke out of the wedge, and it appears that it's going to be going downwards to complete the crash pattern of 2008. But maybe this can be a triangle. Maybe this can bounce up from the bottom trend line, the lows of the previous lows when the market was, and it could be bigger than we think. But maybe not. Maybe this thing goes right past, break that train line, and it goes all the way down to who knows, maybe the lows. If we go to the COVID highs, that's what maybe a lot of people are considering a soft landing. If we go past the COVID highs, then we follow that yellow line all the way down. When we look at the VIX, it's broken out of a trend line right before a gigantic move. When we see the dollar, if that thing goes up, I'm telling you, the world is going to be in turmoil. Don't travel, stay home, and wait until you figure out what's going on, because I'm telling you, 120 DXY is going to be it's going to be incredible to watch. Bitcoin as well in the crypto space, who knows how low this thing can go. Things are very different now. I talked about how Bitcoin halving cycles may have been dependent on liquidity cycles as well, because what's a Bitcoin halving cycle if there was no liquidity during that time? The dollar is breaking a lot of things, and it looks like the US government is willing to sacrifice a lot of countries, but the question is, how many countries can they actually sacrifice before this thing goes just way too far? I think that number is likely larger than we think, and for the other side, it's going to be a lot less than we think. So we're going to have to wait and see. A lot of people, as expected, are looking up for a deep recession that's to come. Even Europe is going through a big time. Right now, it's already probably cold in certain areas, but the Russia war has not come to a conclusion. I don't know what's going on. They might not come to an agreement. Who knows? But if that's the case, then a lot of people are going to freeze. And what we're seeing right now is a bunch of Europeans trying to get firewood and coal. And I just can't understand why the leadership, hey, why don't you have a temporary agreement or something? When we're looking at these countries, their GDPs, their economy is going down. They will be in a deep recession. There's a lot of arguments about the US economy, but in Europe, that will be in a deep recession. Inflation across Europe has soared. I mean soared. It's way worse than the US than anyone's ever thought. Germany, the powerhouse of Europe, is struggling. We don't actually know what's actually going to end up happening with Germany because of the reliance of energy. France, the second powerhouse, is also struggling. And if those two struggle, those two are basically the EU to me. And if those two struggle, then we have no idea what's going to happen this coming winter. This coming winter, with that mass hazard, along with no energy, plus no food, plus economic downturn, honestly, this is a mixture for a third world war to come out of that region again, a third time. But take a look at China. China's real estate bubble. China's real estate is the largest asset class in the world. It is a bubble, and people are wondering what's going to happen. Is it going to crash? Because I'm telling you right now, that real estate bubble is nothing compared to 2008. This bubble, if it crashes, I'm telling you, the world will crash along with it. What's interesting is that Europe understands this. China understands this. The global economy, everybody knows. But we're wondering, what is the US really doing? Is the US really on the right path? Or is this inflation that can't be dampened down? We have to wait and see. In either case, if they're going to start a depression, of course inflation is going to come down because everybody's going to be starving. One has to wonder, is that a good trade-off? Is that what we're actually going for? We're looking at Powell and the Fed. They keep saying that they're going to go all the way until something breaks. A lot of the times, about 70%, I actually believe that's what they're doing. That's why I'm really cautious. But we all have to also understand that a lot of people say that what happens in the third world or whatever, if something breaks, that's not US's problem. That's why they're going to keep going. But actually, that's not true. Ever since migration patterns happened, this is not exactly true. So we have to keep an eye on that. The people that believe that Fed might pivot, they might have a point. We have to wait and see. But when we're looking at all the stuff that's happening right now, we have to figure out what is exactly going on a month-by-month basis. It's a little bit shorter. Jay Powell came out with a statement from Jackson Hole saying that they're going to keep raising rates. They're going to continue until something breaks. People are suggesting that at 3.5% or 4%, that is when something breaks. Right now, we are about 100 basis points away from that. He also said, along with raising rates, we have inflation prints coming up this coming month in September. We're going to see what exactly is going on. If 8.5 from the last drops to, who knows, maybe in the 7 range, they might try to coast off and keep it steady to see October's month. if September's inflation print's anywhere near the last one, we are not stopping. I think the aggressiveness of the hikes might go up. The 75 basis points is getting priced in right now, 50 basis points, a little bit less. People that are saying Fed can only hike 100 basis points or 200 more. There's a lot of other people that believe that this thing they can hike all the way to 5% or 6%. I'm not quite sure I buy that just yet. We have no idea what exactly is on the cards when war is ongoing. Just like when war happens, everything goes out the window, time goes out the window, the day goes out the window. And so a lot of people is thinking this: the market is going to continue rate hikes, it's going to continue falling and crash, and we're going to have starting a trough in 2023, and who knows how long this goes to pick back up with stimulus. Obviously the Fed and the US government is going to need to implement stimulus if it goes down that much, that they can't do this. Just society just can't handle it. A lot of people are saying, of course society can handle it, but there's a saying, 14 days without electricity, human society goes back to the Stone Age. What we're dealing with, because of all the leverage in the system, is a system that if it fails, basically it looks like humanity fails. And then there's another view, which is the Fed is going to pivot. What they're pricing in is that the Fed is not going to, even if it continues to break, they can't go that far, which is why they're pricing in a little bit more rate hikes, but not as much. A lot of people are still saying that the Fed is going to pivot. Who knows? They actually maybe can or might, depending on what happens, especially with the war. Before getting inflation into a problem, I'm telling you, the leaders will be more concerned about war. War first, inflation second. There's a lot of people arguing that it's better to have a little bit higher inflation now than to go down the drain later on, which is what we're looking at. I think a soft landing is out of the cards. I am looking and preparing for a hard landing. What most people have to understand what that means is that a bunch of people are going to be out of the jobs. And I'm not talking about 10,000, 20,000 people losing their job. We can be going into the hundreds of thousands, depending on how far this goes. Maybe it could reach far beyond what we think. If the Fed does happen to pivot or even pause, there's a lot of people saying that money is going to stay in the sidelines until there's a guarantee or the wind at the back, where the Fed also expanding their balance sheet. But what's also true is that people got to make money, and a lot of people, they're not going to be waiting for the Fed. They're just going to go in, and I think that's what we might see. Who knows, we might see David Hunter's prediction about a melt up, and this melt up might be bigger than what anyone ever thinks. If the inflation prints do come down drastically, I think what's going to happen is maybe they might try to coast through where unemployment is coming down, but it's more a balanced come down rather than just a sharp drop. If inflation has consecutive months of coming down and staying down, the second they see an 8.5 going to a 7.7, going back to a 7.9, everything's off the table. That's the sort of whipsaw beast inflation can be, especially if inflation is due to supply chain disruptions. Doomsday scenario, maybe this is not mid-cycle like Julia Leclerc was saying. Maybe it is the end of the cycle. I'm hoping for a mid-cycle, which is basically, look, we get through this, the markets, goes up and down, it doesn't go too horribly crash, and then we make continue going on for another one last bull run. But after that, I think maybe it could be end cycle. But if this is end cycle right here, right now, this means that we are entering that period in history. This means that we're in that period of history where the riots, the looting, the protest, that's actually a constant in our lives, a steady constant, something that doesn't go away, something that doesn't stop. If you remember back in 2020, there was a period that happened. If we go down here, that will be much more longer, as in multiple years, or maybe longer than that. That's going to be the new lifestyle. That's what this all means. If you're in the markets, this thing can go on a lot longer than anyone thinks. People are anticipating some sort of a conclusion. Maybe that's possible because of all the energy constraints. And right now, we're heading into winter. And again, Europe, I actually don't know what's going on, but I don't think sacrificing their people to the cold and mass casualties is a plan. So I do think that the EU, some shape or form, will strong arm the US to maybe have a little bit more leeway. And so if you guys have any other thoughts, let me know. Let's try and figure out what's going on here and brace yourselves for any impact. And I don't mean after the Fed turns around, that's okay. No, from here on out, we have to brace for impact. That's it. 2020, 2022, that was pre-game. From here on out, 2023 and on, it's going to be the fourth turning. And if you guys don't know what that is, that's a book by Neil Howe. I suggest you go take a look and read it. It's one of those books that once you read it, it alters or influences the way you think. It's basically about how generational times create generational differences in different generations of human beings. It's a force to be reckoned with, and you should go read it. In any case, if you guys have any other thoughts, just let me know.